Good afternoon, my name is Jill. I'm the CEO of a multinational and trying to make sure my board keeps up with the digital evolution. The board of a company or organization is a group of people who control it and direct it. Not everyone of the board can follow the fast digital improvements of our time. The following statistics confirm this trend. Only 17% of directors sponsor digital initiatives. 1 in 3 directors say that their business model will be disrupted in the next 5 years, and 16% of directors fully understand how the industry dynamics of their company are changing due to technological improvement. The business world answered to this problem with a couple of solutions. By hiring a digital director or chief digital officer and launching subcommittees on digital improvement. Or by making pilgrimages to Silicon Valley. These improvements were a good effort, but are insufficient to bridge the literacy gap facing boards. To solve new problems like keeping up with the growth of new competitors, boards need to serve as efficient through partners and have a better knowledge about the following subjects: technological environment, the company's value chain, the impact of e-commerce. This means that boards must see themselves as the ultimate catalyst for digital transformation efforts. The following 4 principles will guide the boards to adapt to the fast-changing technologies. First of all, close the insight gap. Second up, understand how digital can upend business models. Furthermore, engage more frequently and deeply on strategy and risk. And last but not least, fine-tune the onboard and fit of digital directors. We will be discussing these principles starting with closing the insight gap. There isn't enough digital expertise. Organizations need more than a few digital directors. The knowledge and experience needs to go beyond 1 or 2 tech-savvy people. One solution proposed by the nominating committee is creating a matrix of the customer, market and digital skills required to lead the company in the following years, and thereby establish more productive conservation with the management. Another solution is creating special subcommittees and advisory councils for digital and technological improvements in all parts of the company. These solutions lead to fresh avenues of discussion with the executive team and new business partners, new applications, and new operating and supporting systems. Second up, we have to understand how digital can upend business models. Many boards are ill-equipped to fully understand the sources of the sudden change pressuring their business models. There are several different things you can do as a board manager to solve these problems. Spending time exploring how their companies are reshaping and monitoring these experiences. Reviewing management plans to improve them. Kicking the tires, this means inspecting something to ensure it meets expected standards. Push executives to explore and describe the organization's stock of digital assets by analyzing the potential of patterns and machine learning. These solutions are underappreciated by most companies, but those companies that best capture, process, and apply these insights tend to gain an edge. Digitalization is changing business models. In the past, there was a high cost and low level of agility bound to the IT. Nowadays, this has changed to cheap, scalable automation and new lightweight IT architectures. The reduction of costs over time is reached by stripping overhead expenses. The following steps can help you do this: by setting up online marketplaces, sell directly to the customer, and improve existing distributor networks. For example, in my sector, the competitors had similar products at lower price and were more customer friendly. This was a risk for losing a significant share of the company's customer base. The moment we were aware of this problem, we started to research for solutions. Conclusion: we now use metrics instead of normal peer comparisons and adapt our e-commerce sales capabilities to stay ahead on our competitors. Furthermore, the board have to engage more frequently and deeply on strategy and risk, because in a disruptive environment, meeting once or twice a year to review strategy no longer works. Companies need regular check-ins to help senior company leaders negotiate the tension between short-term pressures from the financial markets, and longer-term imperatives to launch sometimes costly digital initiatives. To reduce these tensions, the boardroom needs to implement the following guidelines. Clarify their expectations about required cultural change, make sure digital transformation comes through in established businesses, answer questions through rapid idea iteration and input gathering from customers and suppliers. On the other hand, a boardroom has to understand how the ground level works in reality by implementing a tight, loose work atmosphere. This means more informal methods of communicating instead of formal meetings. There are a couple of big risks linked to digitalization. The most common risks are cyber threats and hacker incursions. These problems can be resolved by intensive day-long sessions with the company's IT leadership in order to define an acceptable cyber risk. Last but not least, you have to fine-tune the onboarding and fit of digital directors. Boards need technological talented people. The problem with finding these people is that most of the time they are younger, have grown up in different organizational cultures, and have no board experience. Finding a good fit for a new board member is necessary. Therefore, you have to search beyond the background and skills of a candidate, search for a good temperament, and search for an applicant that has the ability to commit time and effort. Instead of looking for sustainable candidates yourself, headhunting can save a lot of time. These new hired digital directors have to be able to influence change within the culture of the board and play well with others. They have to form a bridge between the boardroom and the IT of the company. Rising tech stars have to overcome a special onboarding program to delve into some topics in greater depth with a collaborative approach. When this induction period is over, the rising tech star is now an effective board participant from the start. If this promising candidate can't commit to a directorship or doesn't meet all the board's requirements, he or she can still get an advisory role in the company. To conclude our problem of adapting our board to the digital age, board members need to increase their knowledge about digitalization and need executives to start thinking beyond today's boundaries. To simplify these problems, you can follow our guidelines that we have discussed above. What do you think? Will the speed of digital progress confronting companies accelerate or slow down in a nearby future? To finish, we listed a number of critical remarks. First of all, the text gives 4 principles but doesn't say anything about how long it takes to implement them. Are we talking about a few months or years? This is not very clear. Secondly, they mention a few risks like cyber attacks supplemented with a couple of solutions, but obviously this costs money. Also, implementing the 4 principles won't be cheap. It's important to know if the revenues outweigh all the costs and can companies afford this extra cost. Finally, the text provides clear guidance for adapting your business to the rapid changing technologies. But if his approach is so efficient, why is the number of companies that actually takes action so low? These are 3 essential points to consider. Thank you all for watching.